Hey guys, Daniel here, and welcome back to the Finance Channel. Yesterday, we hit a major milestone on the channel, over 1,000 subscribers. So before we start this video, I want to go ahead and thank each and every one of you, whether you were here back in October when we had 10, 15 subscribers, or if you're one of our newer subscribers. Welcome to the community. Thank you so much for the support, and I really appreciate each and every one of you who, come onto the channel and watch my stock, crypto, or investing content. So as a way to celebrate, I made a promise a couple months ago that I would do a portfolio review at 1,000 subscribers, and that is exactly what we're going to do here today, so I hope you guys enjoy. When we look at my portfolio, I want to mention a few things before we get started. I am a strong believer in essentially funneling your capital into your highest conviction stocks. I think diversification for the sake of diversification really makes you forced to spread out your money amongst companies that you might not believe in. And when you consolidate your positions into maybe 5 to 10 stocks, you can keep track of those 10 stocks on a very high level and understand those as well, which minimizes a lot of that risk and maximizes returns. Now, when we look at my portfolio here, it's ever changing, right? So what may look like a portfolio here today may be quite a bit different a month from now. But here today, I want to give you guys a snapshot of where my portfolio is at so you can get an idea of the stocks I hold and my plans for them over the long run. So hope you guys enjoy. Position 1, we're starting off a bit controversial here with Peloton, ticker symbol PTON, and this is actually a very recent position. I started this back a week or two ago when the market bottomed. Peloton was just really oversold, and it's a company I really believe in over the next 5 years. When you look at Peloton, they are the leaders in the at-home fitness movement, and they were a strong beneficiary of COVID-19. Now, one of the reasons that the stock sold off so much is, people generally thinking, the economy's reopening again. No one's going to want to buy Peloton bikes. Everyone's going to want to go back to the gyms. But, in my opinion, although that trend will be there and will be visible, I think Peloton is here to stay. When we look at the Peloton community, I have a Peloton bike. I love it. I'm not going back to the gym. I think the Peloton bikes are absolutely phenomenal. And when I go to someone's house who owns a Peloton, it's almost like the Tesla effect, where they're bragging about the bike, they're talking about all the phenomenal aspects of it, and just being generally really positive about the bike and about the community and about the experience that the bike brings as well. So when we think about Peloton, I think over the long run, they're going to expand into more than just bikes and treadmills, which they announced a couple of weeks ago. I see them really expanding into all aspects of fitness and them being the leaders of the at-home fitness movement. I mean, they were a strong beneficiary of COVID, but I think they're poised to continue growing throughout the rest of the year and over the next 5 years. I mean, analysts are expecting 125% revenue growth over the next year here, and I couldn't agree more. Although we are starting to come out of this pandemic, there are still a lot of countries essentially fully locked down. I mean, I'm from Toronto, Canada, and we just announced a month lockdown. Another month of having to stay inside and not being able to do anything. So, we're getting out of this pandemic, but a lot of places are still shut down. So Peloton still has that, major growth left for the rest of this year. And I think over the longer run, this may be a company that grows revenues anywhere from 25 to 30%. So still still a very high growth company. When we look at where I entered this position, I started, a couple of weeks ago. My cost basis is right around $105. In my opinion, Peloton is a company that could go anywhere from $300 to $400 per share 5 years down the road. If they do end up executing on their long-term goals, they're planning to have gross margins at right around 45%. 5 years down the road. Currently, that's right around 40%. So, also a very profitable company. Let me know what you think about Peloton in the comment section down below. I may do a full stock analysis on Peloton as it's a company I really believe in. But again, I think that headwind of coming out of the pandemic is still there, and that may present some buying opportunities throughout the rest of the year, which, I'll happily buy some Peloton in those situations. Next stock up here, if you follow my channel, I'm a big believer in the plant-based meat, just plant-based food, vegan movement. So the next stock here is a company called The Very Good Food Company. And this is somewhat like a Beyond Meat, a much smaller Beyond Meat, which makes plant-based meats, like sausages, burgers, ribs, etc. They have many, many different products, and they all fall under that plant-based meat category. Now, what's interesting about the Very Good Food Company, or their kind of like subsidiary brand, the Very Good Butchers, they are very, very healthy. When you look at Beyond Meat, you don't necessarily like to compare the nutritional value of it compared to a regular burger because it's pretty dang similar. But with the Very Good Butchers, they're really targeting that healthier niche. So, those vegans, vegetarians who want a much healthier meat alternative. And again, I ordered their food, and although it isn't up to par with what Beyond Meat is, considering that it's much healthier, I really, really like their products. Now, when we look at just generally their story here, all of their products are currently sold out. You got to wait a pretty significant amount of time to get your orders just due to unprecedented demand. A lot of people like their food. When we look at the company, they're rapidly growing. They're opening a facility they're from British Columbia, Canada. So they're opening another facility in the kind of within the next few weeks here. They're expanding into the United States in the back half of 2021, early 2022. That's a big opportunity for them. The industry is growing rapidly. I think the plant-based meat industry is poised to grow massively over the next kind of couple of years here. And I think the Very Good Food Company is a company that will be able to take advantage of that. When we look at gross margins, they're over 35 or over 30%. I think they're actually currently are right around 35%. Over the longer run, I think that could easily get to 40% plus. So, very profitable, when it comes to their products. They're not profitable as a company just yet, but once they scale, I think that profitability will start rolling in. They're going to continue expanding into wholesale locations, grocery stores, their e-commerce stores. Just a really good story. When we look at where I bought this stock, I bought it as a spec play back in around early October, at right around $1.50, right? And obviously it's done very, very well. I thought it was very undervalued then. And, the fundamentals have improved. And, the reason I haven't sold out of this one yet is, two main things. One, I don't see a reason to. Nothing's gone bad with the company, and all they have done is execute, right? And secondly, I just don't want to pay taxes. I think I'm up around 200% on the position. So, I don't like selling unless the company's grossly overvalued or something changes fundamentally with the business that makes me think about it in a bit of a different way. That hasn't happened with the Very Good Food Company, so I'll happily hold these shares as the company continues to grow. When we look at my third position here, making up 7% of my portfolio, we have High Tide, ticker symbol HITIF. Now, this is a Canadian-based cannabis company, and what's interesting about High Tide is that they're not just one of the leaders in Canada when it comes to physical retail dispensaries, but they're also one of the leaders in the cannabis accessory market online. They have a lot of e-commerce platforms that sell cannabis accessories. So, you have that exposure to both retail and online, which makes a High Tide, in my opinion, a very attractive opportunity, and potentially expanding into the United States within the next couple of years here. I made a video on High Tide about a couple weeks ago, just generally speaking about the opportunity. So if you want to check that out, make sure to just search that up on my channel or whatnot. But I think it has a lot of room to run over the next just generally few years here. They're at a $376 million market cap. They're doing hundreds of millions of dollars in revenue at its current revenue run rate. And, it's just a very attractive opportunity. I'm right around break even with my shares on High Tide. Again, making up right around 7% of my portfolio. I'm happy holding these, but it's really in a place where, I don't really want to add more High Tide, but I don't want to sell High Tide. So, I've got my position built in it, and I'm just going to, continue holding over the coming years as my thesis continues to play out. When we look at my fourth position here, now we're getting into the bigger positions, right? 10% plus of my portfolio. Making up 10% of my portfolio is Shift Technologies, ticker symbol SFT. Now, when we look at Shift, it may seem a little boring at first, right? Online e-commerce used car sales. But what's very interesting about this company is their revenue growth, and that's what originally drew me to this opportunity. In 2021, they're expecting revenue to grow 126% to $443 million. In 2022, we're expecting revenue growth of 85%, all the way up to over $800 million in revenue. And guess what, guys? This company is worth $700 million as of today. So as they continue to grow, as they continue to expand, this company is just really a steal. They merged with a SPAC, a special purpose acquisition corp, in the back half of 2020, at $10 per share. And, they've been trading at right around $8.50 for the past 5, 6 months here. So, I've been buying a lot of shares over the past couple of kind of like months here in this range, right around where it is right now, in this $8.20, $8.30 range. That's where I've built out my position. And again, over the next 5 years here, I would not be surprised if Shift goes to, $40, $50 per share if we compare it to a company like Carvana, which is another online used car sales company. And, I do have an analysis on Shift, so you can check that out. I'll put a link in the description or something, but, it's another company that I have a strong belief in, just generally speaking, over the next 5 years. The next position I have is just cash. Now, I am holding currently 11% cash and looking for the next opportunity. Now, just generally speaking, I'm looking for a company that, again, has a future over the next 5 years, has a great balance sheet, has strong revenue growth, and has the opportunity to, over 3x over the next 5 years. Now, I'm going to be uploading a 15 growth stocks to buy in the next couple of days here. I'm not sure when I'm going to upload it, but that's going to look at 15 high growth stocks that I think do have a significant opportunity to 2, 3, 4, 5x over the next 5 years. So, I may very well end up buying one of those stocks, but, we'll see what ends up happening. I'm happy with this cash position here, but, I'm looking for another stock. Let's just put it that way. The next company, 15% of my portfolio, the Tattooed Chef, TTCF. This is one of my favorite stocks in the stock market, guys. Here's why. When we look at the Tattooed Chef, they're a company that make very healthy plant-based frozen foods. A very kind of unique niche, not a lot of people in it, but the opportunity there is massive. In the United States, the frozen food aisle is a $50+ billion industry. So when we look at a company like the Tattooed Chef, who, are poised to take massive advantage of this growth in the frozen food kind of trend, I see massive opportunity for them. And, when we also look at this revenue growth, expecting to do $222 million in revenue in 2021, all the way up to over $1 billion in revenue in 2026. Their products are phenomenal. They're in a very great niche. They're continuing to expand in Costco's, Walmart's, Whole Foods, Sam's Clubs, Targets in the United States. Expecting margins to continue increasing as they continue to expand. Same goes for profitability. I can't really say much bad about this company. They have a phenomenal management team, a phenomenal balance sheet. And this is really one of those companies that, in my opinion, has the risk of potentially like a value play, but the growth of a growth stock. And, when you put those two together, you really get something quite phenomenal. So, I've been buying the stock pretty heavily. I made my initial position right around $18 back in kind of late December, and the stock, went absolutely nuts, all the way up to right around $26 per share. But we've seen a decline lately, so I've been taking advantage of this, adding to my position. And honestly, guys, I wouldn't be surprised if over time I continued adding to the Tattooed Chef and made it something that's right around 20% of my portfolio. They're a really phenomenal company, and I'm really excited to see where they can grow and continue expanding going forwards. Now, my next position is my biggest position in my portfolio by a pretty substantial margin, making up 45% of my portfolio. Now, this is a company, when you think about the stock market, this company, I think their risk-reward ratio is unparalleled to anything I have seen before. The potential growth that this company has ahead of itself is absolutely massive, and the name of this company is Voyager Digital, ticker symbol VYGVF. And if you don't know what Voyager Digital is, I make a ton of Voyager videos, all updates about the company. They are a cryptocurrency trading platform. Picture it like the Robinhood of cryptocurrencies, where you can buy and sell Bitcoin, Ethereum, 50+ different coins, commission free. And you can also earn interest on all of your holdings. Over 20 tokens actually earn you pretty high interest rates. I believe if you hold Bitcoin, you get right around 6.5% yearly interest. So from a platform point of view, this is a very attractive, place to park your money if you want to invest in cryptocurrencies from the consumer's point of view. Now, when we look at Voyager from an investor's point of view, it's a very attractive opportunity. Now, they are a commission-free platform, right? But how Voyager makes money is the spread whenever you buy or sell a cryptocurrency. You know, when you sell a stock or a crypto, there's generally a bid price a little bit below the actual stock price, and an ask price a little bit above it. Now, when you buy or sell a token on Voyager, they collect that spread, which is generally right around 0.75 to 1% in size. Now, this directly goes to Voyager in revenue. And keep in mind, this is very, very high profit revenue with margins right around 80%, right? So when we look at this revenue, and just generally speaking, that 10 to 12% of their total assets under management go directly to revenue on a yearly basis. This is a company that is a very attractive risk-reward opportunity as long as Bitcoin stays stagnant or continues to drift higher. When we look at their current valuation, they just did $31.4 million in revenue for the month of March. They didn't actually report that, but that's my estimate based on a few figures that they let us know. So, annualizing that, that's around $376 million in revenue on a yearly basis. And that gives us, at $27 per share, I know the stock has dropped a little bit since then, we got a price to sales ratio of under 12. For a company growing this significantly, guys, they went from like $7.58 million in revenue for the month of January to $20 million for the month of February to over $30 million for the month of March. As long as crypto continues to expand, I see nothing stopping this company from becoming, essentially one of Coinbase's biggest competitors. Now, when we look at where I started buying this, I started buying it back in January at around $4 to $5 per share. But honestly, I think fundamentals have improved almost more than the stock price has gained since that time, which is why I increased my position by right around 25% when the stock dipped a couple weeks ago to right around $20 per share. Now, just generally speaking, this is my highest conviction stock, and I have no plans on selling this for the foreseeable future. Now, when we look at my position sizing with Voyager, I could see myself potentially de-risking in the back half of 2021 and making it a more reasonable position in my account, especially given the potential for a cryptocurrency crash or cold winter in 2022. When we look at Bitcoin and cryptocurrencies, there generally tend to be cycles of bull markets and bear markets, and historically speaking, the end of 2021 should be the end of this bull market. So just generally speaking, I could see myself reducing my Voyager exposure as a crypto winter would honestly devastate Voyager, and I don't want to have half of my portfolio associated with that. Now, one final note that I want to end on, guys, my portfolio is ever changing, so what we see here today may be completely different in a few weeks, but my job is to kind of let you guys know as best as possible if I do sell a position or buy a position, and if you want to know more about a position, let me know down in the comment section down below, and I could potentially make a full analysis on Peloton or the Very Good Food Company and let you guys know things along those lines. So anyways, guys, if you enjoyed this video, make sure to hit that like button. Thank you so much again for 1,000 subscribers. I really appreciate every one of you who subscribe to this channel and watch my videos. So thank you so much for watching and have a great day.